Hi, everyone. I'm Jenna. I work with the Tranel Financial Group. This is Jordan Bradford, financial advisor. I'm sure you guys have seen him in his YouTube videos previously talking about the stock market. So I thought I would bring Jordan back. It is October, mid-October, and we just had an interesting month of September. Jordan, I want to ask you a couple of questions, okay? And we've heard a lot about this in the news, just online, certain things of that nature. What is the September slump?
Yeah, thanks. Great question, and thanks for having me on this call here to give some information. But yeah, the September slump. It's kind of a term that's been thrown around a little bit here this year, but it's not a new term necessarily.
Oh,
In fact, the reason that it's called the September slump is because historically, September is actually the worst month in the market. Over since 1950, in fact, the S&P 500 has averaged a negative 0.5% over the course of the month of September. So
what?
now that doesn't
Wow.
mean that every September is bad. In fact, in 2017, 2018, and 2019, we saw positive results in September.
Okay.
But 2020 and now 2021, we've seen actual negative swing in the month of September. But it doesn't just happen in the U.S. stock markets either; it happens worldwide too.
I did not know that. Well, now it makes sense why everyone talks about the September slump then. There's
Yeah,
historical data to back that. So, why does it happen then? Like, what causes the September slump to occur since 1950?
yeah. So there's a few different ideas basically as to why the September slump happens. I'm
Okay.
going to go through a couple of them here because we don't really know exactly what causes it. Every single time, just
Oh,
because,
okay.
just like any other day in the market, every day is different. There's new news all
Fair.
the time. But there's a couple reasons why I think that this could be happening.
Okay.
One is what's called seasonal behavioral bias. And really all that means is that at the end of the summer months, people cash in trades that they made during the summer. And so
Okay.
as they're getting into fall, getting in towards the latter part of the year, investors tend to get a little bit more active, and they start trading a little bit more. So that's one possible reason, is just that people are placing some extra trades at the end of the year that they may not have placed during the summer months, or maybe they purchased in the summer and now are selling
Okay.
towards the end of the year.
Okay.
Another possible reason is what's called mutual fund tax harvesting. So, a lot of
Okay.
people have heard of tax harvesting, where you are selling some of your losers and some of your winners to try and basically, for lack of a better term, kind of manipulate the capital gains so that you don't pay as much in taxes.
Okay.
And mutual funds are no different. Mutual funds do the exact same thing.
Okay.
In fact, many mutual funds actually have their fiscal year end in the month of September.
Oh,
So, while we're normally used to thinking, the year starts on January 1st, ends on December
right.
31st, many mutual funds actually will end their fiscal year on September 30th. And then they'll start a new fiscal year October 1st.
I did not know
I don't
that.
know why that necessarily is the case, but that is pretty common, especially with some of the more heavily traded mutual funds.
Okay.
So obviously that means that then in the month of September, there's a lot of tax harvesting going on, where mutual fund managers are going to sell some of their losing positions in order to offset some of the gains that the mutual fund might have had throughout the
Hmm.
course of the year. So, that's a good explanation and could be a big reason as to why we tend to see September be kind of a poor performing month. But there's also a couple other possible things too. In fact, one of them is that summer months are historically lightly traded in the market. So volume for trading is typically down during the months of June, July, and August.
Oh,
This could be attributed to a lot of things. I think, for the most part, a lot of people go on vacations during the summer.
fair. Yeah.
Yeah. And that's no different for investors. Investors oftentimes are traveling, their kids are out of school, they're doing more things in the summer, and so they're less, maybe paying a little bit less attention to what's happening in the market.
Hmm.
Uh, which kind of goes back to that seasonal behavioral bias as well, which is that, you may have placed some trades at the beginning of the summer or end of the spring. And now that you've kind of come back from vacation, you're back into the swing of things, kids are back in school and you're back to work. And all of a sudden you're like, hey, I got to place some trades here again. I got to sell out some positions that I was planning on selling out at some point this year. So that's another possible reason. But I guess, that it's not that the month of September is the worst year every single year either. It just happens to be, on average, the worst month of the year.
Okay. Okay. Well, I would have never guessed any of that. So that's very interesting. So thank you for sharing that for September. So next question then is like, coming out of the September slump, do you have any good news for investors, right? We just went through the September slump, right? We saw the end of the quarter. What is some good news looking forward?
Yeah. So, we got through the bad news first, but the good news here really is that over the last 7 months leading up to September, we actually saw a 7-month winning streak in the S&P 500.
Yes.
So that's only happened now a total of 15 times since 1945. So think about, how long of a time period that is. Since 1945, there's only been 15 now instances where the S&P 500 has notched positive returns for 7 months in a row.
Wow.
And what's really cool about that is 13 of the last 14 of those 7-month winning streaks led to further gains in the S&P 500 over the coming 6 months. And the average gain in the S&P during that time frame was 7.8%. So I guess kind of to rephrase that a little bit is, we've just experienced a 7-month winning streak in the S&P 500, which is awesome. Mm-hmm. And historically, what's happened following a 7-month winning streak is that generally the market continues that momentum forward for at least the next 6 months. There's only been one instance actually in the last, since 1945 actually, that we've had a 7-month winning streak followed by a non-positive upcoming 6 months. So, if you're just looking at historical trends, right, you can look at the month of September being kind of a poor performing month, but it's also worth noting that when you have a winning streak, typically that just pushes momentum forward in the market for an even longer extended period of time. And we've seen the market really perform well over the last, over the last 10, 11 years now for the most part. So, we've continued to see this momentum go forward. And I think that there is certainly reason to, feel confident that, following this September slump that we saw this year, we could easily still see a 6-month, return that's positive again.
Okay. So what can people do to prepare for the future then? Is there any, if anything?
Yeah, I mean, my biggest advice to everyone, whether you're a client of mine or you just are looking for some general information, is that the best strategy in most markets is to stay the course with the strategy that you have in place. And communication is key at this time, right? You don't want to get to a point where you're letting short-term market movement dictate your long-term strategies and your long-term goals. And that can easily happen if you fail to communicate with, your financial advisor or whoever's kind of working with you or alongside you to help make some of these decisions. Right. It's important that, we understand that the market goes up and down, and timing the market is incredibly difficult to do so. My biggest advice is, again, stay the course, or if you're uncertain, consult your financial advisor, because, you likely have goals that are short-term, intermediate, and long-term. And the money that you have set aside for your short-term goals, that may need some adjustments made to it. The money that you have for intermediate or longer term goals, oftentimes we want to touch those particular investments less frequently, because we want to keep in mind that we've put together a strategy for long-term success and not for short-term, market, jumps up and down. And so we just want to be really cognizant that we're paying attention to all of the signs in the market and not just, reacting to, this month's news.
Absolutely. Absolutely. That was a lot of information, and I do appreciate you sharing that, right? It really does give great trajectory moving forward. And again, to reiterate what Jordan just stated, the best thing moving forward would be to absolutely consult someone if you have any questions or comments about your current strategy or looking for a strategy to help you during this next coming months, right? It's the end of the year, and the end of the year is the great time to plan, specifically your financials for the close out 2021 and to really start 2022 with a bang. So if you guys have any further questions, please feel free to reach out to us, 847-680-9050. Thank you so much, Jordan.
Yeah, thank you.